Okay, see here, in income from salaries, check the status. We have done basic salary, allowances, provident fund, even gratuity is done. Let me highlight this. Even gratuity we have completed, okay. Now see, next in order is what? I hope you know that we are going in this order, okay. Now next in order is pension. So see, first I will explain the meaning of what is pension, and then eventually we have to study what? Taxable or exempt, okay. So see, what is pension firstly? So see, pension, as everyone knows, it is something which you get after retirement. So it's right, pension is a monthly income which you will get every month after retirement. And see, what is the purpose of giving pension, so that at old age, when you are not working, you are not doing the job, so you have stopped doing the job, but you need money for survival. So company is so much considerate that they feel that as long as you do the job, you will get the salary. And then even after you leave the job, every month you will get some small amount of pension so that you can survive. It is not a big amount, because see, this amount you are getting without working now. It is in fact kind of free only, okay. See, when you are doing the job on regular basis, you are getting a big salary. But now this amount you will get sitting at home after retirement, so it will not be a big amount, a nominal amount. With that you can survive in old age, okay. And the nature of pension is what, it is monthly. Every month it is given on a fixed amount basis after the retirement. And see, every company do not give pension. See, there are many small jobs. If you expect that they will give pension, don't expect. For example, if someone is working under me, I am a small employer, I have a small business. So employee work under me, when they retire, I don't give them pension. So in short, pension is not possible in every job. It is there in only big jobs. Especially government service, you will get pension. And even if it is not a government service, if it is a big private company or a public company where the business is big, so there also they give pension to the staff, okay. Anyways, the main point is what? Whether it is taxable or exempt. So that depends upon the type of the pension. See, if pension is uncommuted means it is received on monthly basis, then it is taxable. But sometimes you can convert your monthly pension into lump sum. Last sentence was important. What did I say? Sometimes you can convert your monthly pension into lump sum. That is called pension is commuted. To commute the pension means convert your monthly pension into lump sum. Because see, sometimes what employee feels, receiving a small amount on every month, it irritates. He feels, instead give me one big amount so that I can invest here and there, or I can use the money for some purpose, say for my son's marriage, daughter's marriage. Sometimes you are in need of big amount. So sometimes you might request your employer that don't give me a small amount on monthly basis. Instead, give me one big amount, give me in one shot. One shot means you will not get repeatedly then. You will get one shot, one big amount, and then your pension settlement is done. Then don't expect pension. Yes, if you want monthly pension, that monthly pension you get every month from month to month till you die. Till you die, you will get the pension. But that will be a small and nominal amount. But if you want to convert into a lump sum amount, you have a choice. But you will have to specially inform your boss. If you don't inform your boss, by default what he will do? He will send a monthly pension at your home. But if you request him, sir, please do one thing. Instead of giving me monthly pension, give me all pension together in lump sum. Then it is called your pension is commuted. And if you commute, it will become exempt. But if you don't commute means, if you let your monthly pension as it is, you receive on monthly basis only, then it will be taxable. Because see, monthly pension if you receive on month to month, it will not be a big amount firstly. So taxing that amount will not be, burdensome to that old employee. But in case employee says, no, I want a lump sum amount, then it will be a big amount. And such a big amount, if government will tax, the burden of tax will increase on that retired person. And already a retired person has paid lot of tax when he was young, when he was doing the job. So what law feels, let him retire peacefully. At least on retirement, he should not have the burden of tax. And if lump sum amount will be taxed, it will create a burden. Why? Because you are getting a big amount in one shot. Imagine if you get 5 lakhs, 10 lakhs in one shot, such a big amount you get, the tax burden will increase. See, soon we will study the rate of tax. And in rates of tax, you realize the higher the income, higher becomes the rate of the tax. And at lower level of income, the tax rate is very less. At particular level, the tax rate is zero. And as your level of income increases, your rate of tax will also increase. And government doesn't want to increase the burden of tax on that old employee who has retired. Are you understanding why I am saying it will increase the burden? Because see, lump sum amount, if you get one shot together, is such a big amount, your tax will increase. And government doesn't want to harass that old guy. Yes, if it is a monthly pension, then your burden will not increase, because anyways at old age you don't have any income. Hardly you will get some monthly pension, say for example 2000 every month. For the whole year hardly 24,000. Even if say 10,000 every month, for the whole year 1,20,000. So that will not increase the burden of tax. And as I said, at one particular level, the tax rate is zero only. The rate of tax goes gradually higher. At a particular level it is 0%, then beyond a particular level it becomes 5%, then 10%. This way the rates gradually increase with the size of the income. Okay. So in short, what I am trying to justify, see, I wanted to justify this thing, that if uncommuted pension is there, which is received on monthly basis, the burden of tax will not be there. So government says taxable, pay tax, because this is not a big amount which will increase the burden of your tax. Okay. But so this will be fully taxable. Now whether it is government employee, non-government employee, for everyone it is fully taxable. But if you receive a commuted pension, see, firstly be familiar with the word commuted. Every time in the question you will see the word commuted the pension, commuted the pension. What do you mean by commuting the pension? Commuting means converting from monthly to lump sum. If someone meets you and says, see dear child, I have just commuted my pension. So what does it mean to say? I have converted my monthly into lump sum. And then immediate what thought should come? It will be a big amount then. This you will not get repeatedly, you will get only once. But it will be a big amount. And receiving such a big amount in one shot will increase the burden. And government doesn't want to burden this old person. Because already that retired person has paid lot of tax while he was young during his service. Now let him retire peacefully. So for his peace and for his, to relieve the burden on him, government will not tax if it is a lump sum pension. See, this knowledge will help you in real life. See, in future when you become a chartered accountant, many people will come and ask you, what should I do? Should I receive the pension on month-to-month basis, or should I convert it to lump sum? You can advise. This is the purpose of being a chartered accountant. What advice you will give? See, if you take the pension on month-to-month basis, it will be taxable. Okay. And if you don't mind paying tax, take it on monthly basis. And the advantage of monthly basis is what every year you will get till you die. So you will have a constant source of income. This is the advantage, but the disadvantage is it will be taxable. And then what is the other suggestion you can give? That if you go for a lump sum pension, then you will get a big amount. Then once that money is used, forget it. Because see, whenever you get such big amount, sometimes you are not able to manage the money. Your money gets spent and the money is gone. Then what will you do? So this is the disadvantage. But then advantage is it will be tax free. You don't have to pay tax on that. But then it is not fully exempt. If he is government employee, then the lump sum pension will be fully exempt. If he is not a government employee, then partly exempt. But it will be exempt under section, look, 1010A. But that depends upon whether he is government employee or other employee. If he is a government employee, then fully exempt. Okay. But if he is not a government employee, then it will be partly exempt. But see, now the next question is what partly means how much. This I will be able to explain you directly with the help of a sum. Because if I try to struggle, explain you theoretically, it will create a mess. Best is immediately I will take a sum right now, and with this sum I will explain what. For other employee partly means how much. So that I can explain the best with the help of a sum. But at least you see this one, look here. For government employee, what I have written? Fully exempt. But for other employee, it is exempt up to something something. But that I will explain along with the sum. Okay. But this much you have highlighted. Okay. So whenever you think about pension, this chart should come to your mind. Repeat the chart. Repeat. Pension divided into two parts. If it is uncommuted, means, see, naturally pension is uncommuted only. See, if you don't tell your boss anything, what will he do? He will give you month to month only. So if you don't communicate anything with your boss, so it is automatically uncommuted, which is taxable. But you know what is the biggest mistake a student does here? If it is a question of government employee, what student does, exempt? See, uncommuted is fully taxable for everyone. So you not come across that event right now, that silly mistake event, but let me, please trust my experience. Okay, I have seen many times a student what mistake he does. Uncommuted pension, if it is a question of government employee, what he does? Exempt. Because you will get used to something, government employee exempt. But uncommuted is fully taxable, whether you are government employee or non-government. So carefully remember that. Yes, if it is a commuted pension, then depending upon government and other employee, we decide whether it is fully exempt or partly exempt. And what is the section? Please notice the section 1010A. Okay. So now see, take out question number 4. Question number 4 we will solve. And the purpose of this question is we want to understand partly exempt means how much for other employee. Keep this statement ready. Statement of income from salaries. Particulars, inner column, outer column. Keep it ready. Statement of income from salaries. Ready? Okay, read. Question 4. Mr. X retired. Circle the word retired. Underline the date. What did I tell you? Whenever the question is on retirement, draw one timeline. Because there are high chances that you will make a silly mistake in months. Anything given per month, you might by mistake multiply it by 12 months. But be careful, the employee is retired. And he has retired in our previous year. What is our previous year? 23-24. Income tax working is always done for a previous year. Okay. And for us, previous year is 23-24. Okay. So first draw that timeline. See, I have already drawn it. First April 23 to 31st March 24. This is our previous year. Then in that mark the date of retirement. So he has retired on 31st October. So how many months salary he will receive? 7 months. Only 7 months. And do one thing on the right hand side area. See this area. This area you mention pension. You know one common mistake which I have seen. Even in case of pension they multiply by 7 months. You will not agree with this silly mistake, but silly mistakes are funny only. You will wonder what this mistake is not possible. It's possible because blindly when you're multiplying the months, even for pension you will take 7 months. Tell me, will pension come for 7 months? No. Pension comes after retirement. That's why this patch is a period after retirement. I have purposely written their pension so that when it comes to pension, you have to take these months. Okay. In fact, pension will be given to him lifetime till he dies. But in our year, how many months are there for pension? 5 months. Okay, then read. In the first line, what is given? Mr. X retired on 31st October after completing service of 22 years and 9 months. Okay. From the following details, calculate his taxable salary. First is basic salary, 26,000 per month. So what you will do? Multiply by 7 months. So right, 26,000 into 7 months. That comes to 1,82,000. Getting? Solve this sum very neatly, huh? Because whatever neatness you want to create, you can do it right now only. And once you come near the exam, you will forget all neatness. And suddenly in exam day, that neatness will not come. That neatness and the fair attitude you have to create over the period of time during the classes. Then next is dearness allowance. But they have written not in terms. First tell me, what is the difference between in terms and not in terms? In terms DA remains constant, doesn't change according to inflation. It will change according to the terms of the boss, but it will not fluctuate according to inflation. And what is not in terms? This will not change as per the terms of the boss, it will change as per inflation. But if you remember last lecture, what did I say? Whether you receive DA like this or like this, in both the case you are receiving, so it is your income, it will be taxable. So right now you should not pay attention to in terms, not in terms. When you are using the formulas, that time the slogan should come in terms, in formula, not in terms, not in formula. But at the time of formula you have to think. Right now don't think, see I am literally not paying attention to this. It is dearness allowance, it is my income, and for allowances how do you think? If it doesn't fit in TC hut, TC udhar, it is taxable. So taxable 4,000 into 12. Sorry. See, this is a silly mistake. 4,000 into 7 months. Show the multiplication in the bracket. Then, okay, now try. Try this. First, you think what to do. Don't solve anything in fair. Whatever rough work you want to do, you do. I know you will not be able to get the answer because I haven't explained yet. That for other employee, wait, first is he government employee, other employee. And see, if you remember, for other employees, I have not said it is exam up to how much. But at least dive into the sum and understand what they are trying to say. I want you to understand this thing, huh? Out of which he commuted 60%. Did you read? Okay, now see, look here. First, you have to remember one thing, there are three types of employees. Means in pension, there are three choices. Some employee prefer completely monthly pension. Means they want month to month only. They don't want anything in lump sum. So that is called fully uncommuted. Okay, that is one case. Second case is some employees think that I don't want monthly, I want everything in lump sum. So that is fully commuted. But there are some employee who are not able to decide. They feel I want little bit monthly also, and I want a lump sum big amount also. So such employees, you know what they do? They take part of their pension on month to month basis and part of the pension on lump sum basis. So that is also one category of employee. So first I had this much, then only I will move ahead. So what are the three types of employee? Some prefer pension completely on monthly basis. They don't want lump sum. They feel if I take lump sum amount, if the money goes spent, then my all money is lost. So I don't want lump sum. It's better I want on month to month basis only. That is fully uncommuted. Second is an employee who wants fully in lump sum. He feels getting month to month is irritating. I want everything on lump sum. That is fully committed. But the third category of employee, they are confused people. They like month to month also, they want lump sum also. So they request the boss that, sir, you are going to give me this much amount. So do one thing, some portion you give me on month to month, some portion you give me lump sum. And in these sums, you will find this third category of employee only. You know why? Because this third category of employee has chosen both. Some portion month to month, some portion lump sum, so student can be tested fully. To test the student properly, they always put in the question the third category of employee. Third category means the one who chooses both, means partly month to month basis, uncommuted, partly commuted. And did you notice here it is like that only? See, actually this amount, his pension was 1500 per month. You know, this amount was offered to the employee by the boss. Boss told him, see, your pension is 1500 per month. You tell me how do you want. So employee might have thought a lot, and then he came to a decision that, sir, do one thing, my pension is 1500. So out of that, read, out of which? Out of which means out of which? Out of 1500. Read the English properly. His pension was 1500, and out of which means out of this 1500 only, he said that I will commute 60%. 60% of 1500, that comes to 900. Actually it is per month, 900 per month. But if you say I want to commute, it will become lump sum. 900 per month will get cancelled. See, it will be like this. Look here. Out of 1500 per month, what did he say? I want 60% to be commuted. Okay. So 60% of 1500 is how much? 900 per month. See, why I have written per month? Because originally pension is per month only. But now since you want it to be commuted, so this will get cancelled. And instead of that, you get a lump sum amount. How much? 4,20,000. That was given in the question. I hope you have seen the question. Okay. But this is settling his 60% right. In his right, 1500 is the pension. So 60% he has settled on lump sum. So what is the balance? Wait. The balance amount is 40%. And that 40% is what? 600. And that will be uncommuted. And uncommuted means what? This he will get on monthly basis. Okay. And it will start immediately after retirement. So you retired on 31st October. So after that November, December, Jan, Feb, March, even after March you will get. But we are preparing the statement till March. So till March how many months? 5 months. So this, first tell me, will this per month get cancelled or this per month will remain per month? This per month will remain per month because uncommuted means what? Uncommuted. I don't want to convert. Keep it per month. So if it is per month, let it be per month. So if it is per month, then multiply by 5 months. So that comes to 3000. And what is the treatment of uncommuted pension? See this the chart I have explained. Uncommuted pension will be fully taxable. So in our question, what is the uncommuted pension? 600 into 5 months, that is fully taxable. See, next year he will get 600 into full 12 months. Next year he will get 600 into full 12 months. See, in this year it is a fresh retirement. So he could receive only for 5 months. But next year will he get for 5 months or full 12 months? Full 12 months. It will be taxable. Even again next year he will get. Every year he will get till he dies. And every year it will be taxable. But what about this 900? Why did I cancel? Because commuting means what? Cancel monthly. I want lump sum. So cancel monthly and you get lump sum of 4,20,000. Okay. Now see, look here. First we'll do one thing. We will write the effect of this because this effect we know. I have already explained the effect of uncommuted pension. What is the effect of uncommuted pension? Taxable. So first let us write that. What I have to yet explain is treatment of commuted pension. That I will explain. So first do one thing, write this much. See how I have written. First write pension, then underline and make it as a heading. Below that, two bifurcation, two arrows you will draw. Pension uncommuted 600 into 5 months, that comes to 3000 fully taxable. Do one thing in the question, wait, in the question underline this part. Because I have noticed many students do not read this properly. Out of which means out of which amount? 1500 only. And see, it is like this only in real life. See, even in future, when you also start doing the job, when you also retire in future, originally boss will offer you one per month amount. You are always given a per month amount. And then he will say, now tell me, should I give you like this only? Or you want to convert? If you don't say, he will give you per month, per month, per month only. Like this employee also, if he would not have said anything, employer would have given every month 1500, 1500, 1500. But then he said, no, out of 1500, I want to commute 60%. Means cancel my 60%, give me lump sum. So the balance will be uncommuted 40%. Okay. Now see, for commuted pension, what is the rule? In our question, what is the amount of commuted pension? 4,20,000. If it was received by a government employee, then it would have been fully exempt. But is he government employee? No. So now see, in such case, what law says, see, for other employees, we will exempt only if you commute half of your pension. Only if you commute half of your pension. Half means 50% of your pension. Whatever is your pension right, 50% of that if you commute, then we will exempt. Because see, what law feels, the people who are confused whether to take monthly or lump sum, for them the advice is what, take half in lump sum take half on monthly. See, even if I was confused in my real life, so what advice any person would give me? See, whatever company is offering, take half lump sum, take half in monthly basis. So that is what is the thinking of government. And what government says, if you take 50% in lump sum, we will exempt you also. But this employee was little choosy. He said, no, I will commute 60%. It's your choice. You commute 60%, you commute 70%, you commute 80%. But we will exempt you if you commute 50%. See, this 50% is fixed. I am not saying casually. 50% is a fixed rule made by government, that if any employee commutes 50% of his pension, then we will exempt him. But if he commutes 60%, 70%, then accordingly he will get more amount. See, the more you commute, the more you will get as lump sum amount. Okay. But government says we will not exempt fully. Partly means partly. And government has fixed a limit that up to 50% if you commute, we are going to exempt. So see, in this case, you know what we should do? Look, if for commuting 60%, your boss has given you 4,20,000. Imagine if you would have requested for 50% commutation, how much you would have received? Cross multiply. Are you understanding this 50% which are written? It is a fixed rule. By heart 50%. 50. Up till 50 if you commute, government will exempt you. But see, 50 is a percentage. How to find out like an amount? You can do it with cross multiplication. It's a very simple maths that if for 60% of commutation, your boss has given you 4,20,000. So if you would have requested him for 50%. See, government is not forcing you that you should have taken 50%. It's your choice, it's your life. But income tax rules go as per government. So they say if up to 50% you would have commuted, we will exempt. But then 50% amount you will have to work out by cross multiplication. So that comes to how much? 4,20,000 multiplied by 50 divided by 60. Ignore the percentage part. Into 50 upon 60. That comes to? That much will be exempt. So in short, out of 4,20,000 you received, how much will be exempt? 3,50,000. This is called partly exempt. If he would have been a government employee, let him commute 60%, fully exempt. Whether he commutes 60%, 70%, whatever percentage he commutes, it will be fully exempt if he would have been a government employee. But for other employees, it will be limited. Because you know, other employees, they are working in private sector, and private sector employers, sometimes they spend lavishly on the employee. They give big amounts. See, government employee, if you are working in a government job, they don't give too much of pension also. They give pension also in limits. So even if you commute entire pension, you won't get too much. But in private job, your pension itself is so high. Like imagine, if my pension right was, instead of 1,500, if this was 10,000 per month, my company decided my monthly pension is 10,000. So if I commute it, it will give me a huge amount. Means they allow only a big amount of pension. So commuting that means converting into lump sum will give you a big amount. And that much big government doesn't want to exempt. Yes, in government job, they hardly give you some pension. Means they give pension. See, the speciality of government job is what? It is secured and a safe job. Okay, but they give in limit. So already your pension amount was decided in a limit. So even if you commute fully, law doesn't mind. Conclusion, for government employee, whether you take the full pension or lump sum or some portion of it, it is always fully exempt. But for other employees, what is the rule? If out of your pension, you commute 60, 60, 70, 70%, Baba, then it is not fully exempt. You can commute up to 50%. And 50% amount you will have to calculate by cross multiplication. Now, did you understand why I took a sum? Because in sum you can easily understand cross multiplication, immediately you can get the answer. Okay. So now let us finish this sum. Wait. See how I have done? Can you see the presentation? You also do like this. First write 4,20,000 in the inner column. Then see, look. In particulars column you can write 60 and immediately below that you will write 50 and you can show there itself cross multiplication. So that when you revise in future you can understand what you did. Commuted. Please notice this section also. Gratuity was 1010. This is 1010A. See, this 60% can be anything given in the question, right? But 50% is fixed. Done. Then total up. Total is gross salary. Come on fast. 2,83,000. Come on, speed up. Once you understood the concept, do all clerical job fast. 2,83,000 gross salary less deduction under section 16. Standard deduction 50,000. Entertainment allowance, profession tax not there. Done. Okay, now see here. Look. See this 50%. Sometimes you have to take 33.3333333333%, which is like 1/3. Instead of 50%, sometimes you have to take 33.333333%. Why I will tell you, but tell me, if you would have taken your 33.3333, you can solve it or not. Solving is not a big deal. What you will do in your calculator, 4,20,000 you will multiply by 33.33333. You have to write maximum 3s on your calculator and then divide by 60. But you know when to do 33.333333 if employee receives gratuity. Tell me in our question, see our employee Mr. X, he retired. But did he receive retirement, gratuity on retirement? If he would have received, they would have given in the question. And see, every employee do not receive gratuity. So this employee did not receive gratuity, and the one who do not receive gratuity, for them it is 50. That means if in the question gratuity would have been there, that means it's a sign that he received gratuity. And then exemption will not be 50%, it will be 33.33%. Why? Are you noticing people who receive gratuity on retirement, they are given less exemption in pension? Isn't it less? Instead of 50, if I take 33.33, you are getting less exemption. Why? Because already he is receiving gratuity and he is enjoying exemption for gratuity also. And the person receiving gratuity, he is retiring happily. And already he is happy, so he doesn't need more happiness. So only 33.33. But this employee, did he retire happily? He was sad. His boss was bad. He didn't give gratuity. See, he is crying. You can't see his tears, but I know he is crying. See, he didn't receive gratuity. Take it on you. If you were working and if your boss has not given any gratuity, it is a sad retirement. And for such sad employees, government has given 50% exemption. Relate like this. If you are sad, you want someone to make you happy or not. Tell me, if my students are sad, I will try to make them happy or not. So government is also thinking like that. That if an employee has retired without receiving any gratuity, so he is happy or sad? He is sad. And if the employee is sad, how government feels like making happy? Okay, Baba, don't cry. You didn't receive gratuity. Your boss was bad. But we will do one thing. For your pension, we will give you 50% exemption. People receiving gratuity, they will be given exemption of 33.33 only. But you will get exemption of 50%. See, if you understand with logic, you will be able to by heart. Otherwise, see, if you just mug up right now, if there is no gratuity in the question, 50. Otherwise, 33. You will forget after some time. You will always make a mess. So, what is the technique to remember? Those employee who has retired without gratuity, that means their retirement was very bad and sad. And to make them happy, government is giving more exemption by giving 50% exemption. 50% is more, right? And vice versa. See, I'll show you one more question. Look here. In this question, what do you feel? In question number 5, see, in this question also there is pension. But this guy has received gratuity. So in this question, is the employee sad or is happy? He is happy. He is already happy. So he doesn't need more exemption in pension than only 33.333%. But this is a different question, right? Right now we are doing question number 4. Our employee has received pension, but he didn't receive gratuity. Okay. See, you might wonder, we are discussing pension, but why it is connected with gratuity? See, I understand pension and gratuity are two different things, but the common part is it is a retirement item. It all happens at the time of retirement. Although it sounds little funny that treatment of pension depends upon treatment of whether he received gratuity or not. But that's okay. Ultimately, gratuity and pension, they are all retirement benefits. So we have to simply see those employees who retire sadly without gratuity, they need more exemption of pension, that is 50%. Okay. Yes. See here, you don't have to see POGA and all. Whether you received gratuity or not, obviously POGA employee will always receive gratuity. That is okay. See, even if you are not a POGA employee, if you have received gratuity, you are happily retired. And those who are happily retired by receiving gratuity, so feel they are happily retired, so they don't need more happiness, only 33.33. Okay. Yes.
Can an employee commute his pension after the year of retirement?
Yes. That point will come in one question. That is a good point. It is there in the package. Package means in our course it is covered, that point will come. But right now it will be creating confusion at this stage. There is one master problem in that point, in that question it is there. So see, look, read what I have written. Exempt up to how much? 50% if gratuity is not received. Have I written correctly?
Yes.
How to link gratuity is not received, that means poor employee sad. How to making happy? By giving more exemption. And if he has already received gratuity, in short you have to look for that in the question only. In the question there is gratuity, means he has received gratuity, then 33.33. But in your calculator you will take 33.33333, use the full capacity of the calculator to write maximum 3's. Okay. And see why I have written this cross multiply, because this is a technique we follow. That's what we did right now. See, cross multiplication. Okay. Otherwise, see, if I don't write cross multiplication, so after some time this will fade away. You will just remember 50%, but then 50% of what? So it's better whenever you revise this 50%, 33%, also revise cross multiply. Okay. And they will already give you some percentage. Okay. Now do one thing, just try this orally. Just try this orally. We are not solving this question because see, look, this question I cannot take because it has leave salary which is yet to be taught. Okay. Just for the sake of this pension part, tell me how will you do? His monthly pension was 1000 per month. See, this amount which they give in the question, it is his total pension, it is his total right. Means as per the employer, you have got right to receive this much. Now you decide how do you want it. For this, what did I say? Some people prefer everything in monthly basis. Some prefer everything in lump sum. But what has he preferred? Partly, partly. See, 1000 per month, out of which means out of which? Out of 1000. So see, the working will be like this, 1000 per month, out of which 40% is commuted. 40% comes to how much? 400 per month. And commuted means this will get cancelled now. Because once you commute, a monthly pension gets cancelled, it becomes lump sum. And what is the lump sum? 1 lakh 60,000. But that was 40%. What is remaining? 60% is uncommuted. And uncommuted means it is per month. It will remain per month. Uncommuted means unchanged. Uncommuted, unchanged. It is per month. It will remain per month. But this you will multiply by period after retirement. And in this question, he has retired on December. So after retirement, Jan, Feb, 3 months only. Okay. I just wanted to show that this is the way they ask pension in the exam. Do one thing we forgot. I think you have not drawn this thing. Draw this is compulsory. I also forgot to insist. In exam it is not compulsory. But since I have taught you like this will help you. Done? Drawn this thing. So we have done pension finally. See, wherever I am giving you a chart, chart means what? This is the way you should think. Like see here, pension. First you should check whether it is uncommuted or commuted. In this question it was partly uncommuted, partly commuted. And usually the question is like that only. And then you have to see for uncommuted taxable, commuted further check government employee or other employee. Means the way the chart is flowing, your line of thinking should be also flow that way. Should also be flowing that way. Okay, now next in order is leave salary. We did gratuity last time. After that we did pension. Now next is leave salary. Now see for leave salary, first I will explain what is the meaning of leave salary. Because only if you understand what is leave salary, then only you can understand further taxable or exempt. Eventually here also we have to study whether it is taxable or exempt. But then first you should understand what is leave salary. Okay. So I am explaining the meaning of leave salary. Look, every company allows you some number of days as holiday. And that is over and above Sundays and public holidays. What did I say? Every company allows you some number of days as holidays. It can be 20 days, 25 days, 40 days, any number of days. But these holidays allowed by the company is not your Sundays and public holidays. Sundays and public holidays, everyone will get holiday. But over and above Sundays and public holiday, you are given some extra leave. And you know why company gives you that extra leave? Because see, if suddenly if employee falls sick, he will not wait and watch for a Sunday and fall sick. If he has to fall sick, he can fall sick on Tuesday, Wednesday, any day. So sometimes you fall sick and sometimes there is a function at your home. So you need holiday. So boss understands that employee has got its personal life. He also needs holidays over and above public holiday and Sunday. So that's why big company, they allow you some leave and they say you take this much leave, we will not cut your salary. Otherwise, companies are strict. If you take more leave, they cut your salary. But here, what they have done, look, for example, they have allowed you 40 days leave. 40 days is just an example. Please don't buy heart. It can be 25 days, 30 days, anything. So let's assume company has allowed you 40 days leave every year. So what is the meaning of this? Apart from your Sundays and public holidays, you can take extra 40 days holiday. That means in a year there are 365 days. In a year there are 365 days. So calculate in 365 days, Sundays, public holidays, leave aside. Leaving that, you will get extra 40 days holiday. And this holiday, even if you take, company will not deduct your salary. So this is an advantage for the employee or not?
Yes.
Okay, but then at the same time company is threatening you. If you take leave of more than 40 days, then we will cut your salary. Up till 40 days, if you take the holiday in a year of 365 days, we will not deduct from your salary. We will give you full salary. Even if you take a holiday, enjoy full salary. But if you take more than 40, for example, you take 43 days holiday, so company will deduct 3 days salary. Okay, but that is not leave salary. Leave salary will come now. Look, imagine employee was allowed 40 days holiday and he has taken only 10 days holiday. So that means how many days leave he has saved? 30 days. So tell me, is it a bad performance or good performance? Very good performance. If he wanted, he could have taken holidays of 40 days. He could have gone out with his family. But still his sincerity that he took leave of only, see what is his 10 days leave taken? Means he has taken only 10 days. That means he has saved 30 days. So do you agree it's a good performance? For this good performance, he will get a reward. What reward he will get, He will get 30 days extra salary over and above his yearly salary. See, this is a record of 1 year. So in 1 year you get 12 months salary. You will get plus extra 30 days salary as a reward for good performance. See, I have written here as a reward for good performance. See what you got. See, 12 months salary is the basic amount. See, why I am writing 12 months? Because I am talking about a year. See, this 40 days which I written, it is a number of leave given in 1 year. Obviously, whatever I am saying right now, it is for a year. So, in a year, he could have taken 40 days, but he took only 10 days. He saved 30 days. So, company is very happy. Company feels that you didn't take holidays. Very good. People are dying to take holidays. Okay, but you didn't take holiday in spite of we allowing you to take. So, that is a good performance, and for that you are given a reward. Reward means not like a trophy kind of. Not literally that reward. Reward means you will get extra salary. But how much extra? Depending upon how many holidays you saved. You saved 30 days, so you will get 30 days extra salary. And why I am saying extra? Because in a year you already get 12 months salary. So this will be some extra thing. And this extra salary is called leave salary. I explained the meaning. Didn't I say first I will explain the meaning of leave salary? So this is the meaning. So tell me how to earn leave salary. If company gives you leave, don't take holidays. See, if you take holiday, there is no punishment because company itself, they are allowing you to take holiday. But you don't take holiday. You save the leave. And the leave which you have saved, you can encash. See my language? The leaves which you have saved, you can encash means you can convert into money. Okay. Actually, see, employee has a choice that should I take 40 days holiday or should I encash it? Correct or not? He has got a choice of what? Should I take 40 days as holiday and enjoy sleeping at home or should I encash? He has got both choice. So see, and why company has deliberately given the option of encashment so that he will not take holiday? Because if company wouldn't have given him that incentive, any employee what he will do? He is given 40 days holiday, he will not come for job. He will relax 40 days. But purposely company has given him an incentive that if you want, you can encash your 40 days. But then you should not take holiday. So this incentive is given deliberately so that employees take less holidays. See, here he has taken only 10 days holidays. He is not sincere. He is money minded. His wife insisted him so much, let us go to Lonavala. Let us go for a picnic. You are given 40 days holiday. But he was not taking any holiday. Why? Not that he doesn't enjoy holiday. He also enjoys holiday. But he knows if he takes less holiday, remaining leave he can encash. So that is the incentive which is encouraging him to take less holidays. Okay, tell me, what if he would have taken 0 holidays? I want a proper language. Then entire 40 days leave he can encash. I want you to use this language. If he has taken 0 days holiday, then entire 40 days leave he can encash. Means he will get 40 days salary extra. But see, this 40 is not fixed. Huh? Some companies allot 40 days leave in a year. Some companies allot little less. Some companies might allow only 10 days. At the most, you can take 10 days holiday. And if you don't take 10 days holiday, you can encash it. Okay. So when the leaves are encashed, it is called leave salary. Actually, see, best way to remember is there are 3 possibilities. If you take exact 40 days, neither your salary will be deducted nor you will get extra. If you take more than 40 days, your salary will be cut. If you take less than 40 days, you will get extra. Repeat, what did I say? If you take exact 40 days, it is neutral. You were given 40 days holiday. You took 40 days holiday. So neither your salary will be cut nor you will get some extra. Means your salary was of 12 months, you will get 12 months salary fully, that's it. But if you take 45 days holiday, then it is very bad. 45, that means how much extra holidays you took? 5 days. 5 days salary will be cut. In your 12 months salary, 5 days salary will be cut. But if you take less holiday, say only 36 days, 36 in my example now, 36 days holiday you took, so you said 4 days. So 4 days salary you will get extra. Okay. Now see here, this 30 days salary, extra salary is getting, some companies, do not give you at the end of the year. They say that this leave you have saved, you carry forward to next year, you can encash it at the time of retirement. Means they are not giving you the cash right now. Some companies. Whereas some companies give you immediately at the end of the year. You can go to the cabin of the boss again, you can tell your boss, boss, you gave me 40 days, I took only 10 days. I saved 30 days. I want to encash 30 days. He will give you immediately at the end of the year, at the end of the year. But that is in some companies. But in some companies what happen? You will not get the money right now. Means boss will say good per, he will simply tell you very good. But he will not give you money right now. Because he wants to give you the money at the time of retirement. So then employee will remember that 30 days leave I have to still encash. And that you will keep it in your mind and you will carry forward. In fact, company will maintain your account. Company will maintain an account of your leave, that 30 days leave this employee has saved, we will give him cash but later on. So this will get carried forward. Look here. So tell me now, in such case what will happen next year? Means I am taking a scenario where he was not given the cash immediately. See, there is no fixed rule in the real life. It can happen anything. Some companies give you on the spot and some companies give you at the time of retirement. So right now I am taking an example where you are getting at the time of retirement. But then in such case, this leave will become opening balance of next year. So next year opening balance 30 days. Leave further allowed 40 days. Now in year 2, you can take 70 days holiday if you want. But employees prefer not to take holiday because the more amount of holidays they save, they can encash. Okay. So let's assume in the next year, he took holidays of only 5 days. His wife insisted a lot. Let us go to some foreign country. We have got 70 days holiday. But husband was miser. He said, no, I don't want to go here and there. I want to work for my company. And he took only 5 days holiday. That also he had a viral fever. So he had to take some holidays. Are you understanding why employees taking less holidays? Because if he takes less holiday, he can save more. And the more leave he saves, he can encash. So now in his account, how many holidays are left? 65 days. This will get carried forward. See, I am assuming this company is not giving the money immediately. So this will get carried forward. So tell me, next year in his account, 65 days will become opening balance. And leave allowed during the year, 40 days. So he can take 105 days holiday. See, sometimes it is a blessing. You never know, sometimes you are hospitalized so badly sick that you need so much holiday. So in such bad time, this 105 days holiday will be a boon. Okay. But let's assume in this year, instead of 105 holidays, he took only 2 days holiday. Only 2 days holiday he took. So now how many holidays are left? 103. This will be carried forward. Okay. So carried forward. So next year opening balance will be, repeat, 103 days and further leave allowed 140 days. And then now we have to see how much he has taken. He has taken only 3 days. So now he has got 140 days. In short, this way it will get carried forward. And then let's assume he retired here now. Let us assume he retired. I don't want to make him retire for after 20 years. I will have to do the working. So let me retire him after 4 years. So tell me, if after 4 years he retires, how many leaves are there in his account? 140. He will tell his boss, I want 140 days encashment because I have saved that much leave. So this is called leave salary encashed on retirement. See, what I wanted to say here is, look, this thing. I wanted to say this thing. Look, sometimes leave salary is encashed during the service and sometimes it is encashed on retirement. Depending upon that, we decide taxable or exempt. See, don't forget our main objective is taxable. We are studying income tax. See, all this knowledge you require because without knowledge, I cannot jump to the main thing. But now, eventually, after you understood what is leave salary, the main point is taxable or exempt. So that depends upon, look, if it is encashed during this service means what? On year-to-year basis, you will get the money. Like in first year, you are saved how much leave? Immediately you will get 30 days cash. But then if you get 30 days encashment immediately, it will not be carried forward to next year because your account is settled. See, if your money is settled, we don't carry forward. In accounts also you have studied. If your data say paid the money, balance becomes zero. So like this only, if your boss has given you 30 days money, so you will not carry forward. So and if you get the money on year-to-year basis, it is called encashed during the service. And then it is fully taxable. Because then it is like a regular salary. Every year you get 12 months salary plus something extra. And your 12 months salary is taxable. So that extra thing also becomes taxable. Extra thing means this thing. Your 12 months salary is taxable or not. So whatever extra you got along with your yearly salary, even that will become taxable. In short, if leave salary is encashed during service, it is fully taxable for all employees, whether you are a government employee or a non-government, because law treats this like a normal salary only. It is just along with your 12 month salary, you got something extra because you saved the leave. But it's like your normal routine salary, it will be taxable. But can you guess now? If you encash on retirement, then it will be exempt. You know why? Because if you keep carrying forward your leaves, like the way I was explaining here, see, it was getting carried forward every year. So, if a person retires after 20-25 years, can you imagine in his account, so many days of holidays will be left. And for so many number of days, he will get more money. And if you get more money, the tax will be more. And government doesn't want to bother this retired guy in his old age. See, what is the mentality of income tax department? Retired person should not be harassed. Because already that retired person during his service has paid lot of tax. Now let him retire peacefully. In the sense, let us not tax him. That's why if you receive on retirement, it becomes exempt. Because a retired person has become old and everyone respects that old person, let him not harass. So income tax department also feels like let him not harass and let him not charge tax. And if this amount becomes taxable, it will be a big amount also, right? See, you get leave salary on year-to-year basis, then it is not a big amount. But if you keep accumulating the leave and if you carry forward, so at the time of retirement, you will have, say for example, 1000 days leave. And for so many number of days of leave, you will get a huge amount. And such a huge amount will have more tax. And that government doesn't want, that's why exempt. Instead, I am telling you the logic, you should understand, feel the rule. Don't by heart the rule. So in short, this is exempt. But under which section? 1010 AA. See, gratuity was 1010. Pension 1010A. This is 1010AA, AA. Now can you guess what is this? What is this? So by now you are trained now. See, if he is a government employee, then it is fully exempt. As usual, government employee fully exempt. Okay. And if he is not a government employee, then a formula. It will not be fully exempt, it will be partly exempt, and here it is partly exempt like this. See, 1, 2, 3, 4, whichever is less. Out of 4 amounts, whichever is less. Just read it once, then I will explain one by one. First amount is a fixed amount, 25 lakhs. By heart, 25 lakhs. 25 lakhs. Like in gratuity, it was 20 lakhs. Here it is 25 lakhs. Then actual amount received. As you have seen on in all such formulas, actual amount is always there. Then 10 months is fixed. Multiply by average salary per month. Leave credit into average salary per month. Now, what is leave credit? What is average salary per month? I will explain. Okay. And the logic of all this I will be able to explain in a question only. Here also my plan is what you know. I will just give you the meaning of what is average salary and what is this leave credit, and immediately start with the sum. And in this sum I will explain the logic of why this 10 months is here. All logic, because see, if there are amounts in front of me, I can convince you better. Okay. So for the time being, just ignore the logic. Just try to mechanically understand what is leave credit and what is average salary. Can you guess what is average salary? Like in gratuity, it was average basic per month, average DA in terms per month, average turnover commission per month, average of 10 months. But here it is not preceding 10 months, 10 months up to the date of retirement. Means if you are retired on 31st of December, you will count December also. Like in gratuity, what we did, preceding 10 months. I don't know whether you have the memory of last lecture or not. We said preceding 10 months, so the month of retirement we ignored. It's not that he didn't get salary in that month. If you work till end of the month, you get salary. But for average purpose in gratuity, what we did, we ignored the month of retirement, we took preceding 10 months. But here it is not like that. You have to count the month of retirement also. See, in the law it is written, it has been written like this. Look. Read. Average of last 10 months up to the date of retirement. So if he has retired on say 31st of October, so 31st October till 31st October means you have to count full October. Okay, now what you will wonder, right now, what nonsense, in gratuity it was little different. Here it is little different. Eventually it is average salary only. So law should have been the same. So see, actually there is no logic of keeping the difference between gratuity and leave salary. Sometimes it is unintentional. See, as a student you might find it funny that in gratuity you ignore the month of retirement, you take preceding months, and here you are taking the month of retirement. Why? So actually there is no logic as such. It is unintentional. Because see, income tax law is a big law, and this law was not made on one day with full planning. The law has gradually been developed, and every year finance minister is different. Like now election will be there. Till now Nirmala Sitharaman was the finance minister. Tomorrow someone else will be finance minister. And when a new finance minister comes, he will take the charge. And when he makes the rule, he will have a different wordings in the law. So sometimes they don't intend. Unintentionally there is a difference. See, right, you are studying the law as a finished product. Income tax law is the ready-made law. You are studying it as a finished product. But in real life, is income tax law a finished product? Or it is evolved gradually? It started in 1961. In fact, even before 1961, income tax was there. What is the Act, Income Tax Act 1961 we say? Even before 61, there was Income Tax Act 1922. Income Tax Act 1922. But that is abolished because that became very outdated. Then came Income Tax Act 1961. And even that is evolving on yearly basis. And when the law evolves gradually, every year there is a different finance minister. So you will find some discrepancy and some unusual thing in the law. So you should not mind. But whatever, for a student it becomes a very good point in exam. That if it is a question of gratuity, then in 10 months you will ignore the month of retirement, you will take the preceding months. But if it is a question of leave salary, you will also include the month of retirement. You will take 10 months including the month of retirement. So because of that your answer can differ. Okay. But if you say any particular reason for this, no particular reason. Because see, it is just a matter of wording. In the gratuity, the wording is preceding. Now, the people who are aware of English, they understand preceding means preceding. And here the language is up to the date of retirement. So, law did not actually intend, but when the wordings are drafted in such manner, you have to interpret accordingly, okay? So anyways, be careful here. Average salary is kind of what we studied last lecture only, but here you have to include the month of retirement. Okay, then this average salary will come here. Logic I am not explaining right now. First I am explaining the formula as it is. Okay, logic will come in this sum. Now see, what is leave credit? Can you guess? Yes, leave credit is what you know in your account, how many days holidays are left. Like I was maintaining one account here. That in first year he saved 30 days, it got carried forward, then 30 plus 40 it became 70, then he took 5 days, so 5 days was using, 65 was remaining. So what is remaining in your leave account? What is remaining in your leave account is called leave credit. And why it is called credit? Because for the company it's a liability. And in accounts we represent liabilities with credit balance. See, for company it's a liability because company has to give me. So they say it's a credit balance. Credit balance of holidays. Like in my account what was remaining at the end? 140 days. So for the company it is a credit balance. But wait. This leave credit you have to calculate not as per company's rules. Like company's rule might be to give 40 days holiday every year. But here in the formula you will not go as per company's rule of 40 days or 45 days, whatever may be the company rule. We will not go as per company rule, we will go as per government rule. And you know what government says? In a year maximum 30 days holiday should be given. In a year, maximum 30 days holiday should be given. See, I was taking an example where I took 40 days. This was a particular company's rule. See, that is company. For example, I am the boss. It is my wish. I can allow my employee 50 days holiday in a year. Enjoy 50 days holiday over and above Sunday public holiday. I never do that. In my office, I hardly give 1 or 2 extra days holiday. That's it. Because they have to handle all students, my staff, okay. But it is the choice of the company. They might give you 40 days, 50 days, whatever. But as per government, what is the reasonable holidays?
30 days.
Maximum 30 days in a year. See, here it was in a year 40. But that was the rule of the boss. But this leave credit you have to calculate not as per the rule of the boss, as per the rule of the government. Okay. So see here, there is a formula for this. Look. For some time it will sound little mechanical, but once I make you understand logic, you will feel so much satisfied. See here. As per government, in a year you should be given 30 days holiday. But 30 days holiday should be allowed in 1 year. So if employees work for 20 years, so it will be multiplied accordingly. And then compare with how much he has already taken. So see, for the time ignore this 1 month. Assume some employees work for 20 years. So tell me, as per government, in 1 year you should be given
30 days.
30 days holiday. This is the mentality of the government. Okay. And you will wonder why we are looking at government's mentality, because government is giving you exemption. Money your boss will give. Exemption who will give? Government. And right now employees already received the money. We are deciding how much exemption, and that goes as per government's policy. And government says in 1 year how many holidays should be given? 30 days. But that is in 1 year service. So if someone has worked for 20 years, so how many holidays he should get? 600 days holidays he should be allowed according to government. See, I have written here allowed. Can you see? According to government, he should be allowed 600 days leave total in 20 years. Now government says how much you have actually taken. Say for example, you have taken 480 days holiday. This is the actual leave taken during his 20 years service. So now find out the difference. So according to government, in his leave account, 120 days leave balance is there. But now this is in days. You will have to convert into month. You know why you have to convert this into month? See why, how, I am not asking how to convert this. Why first? Why? Because this will be multiplied by average salary per month. So if something is per month, so it has to be months. So that 120 days which we got, how will you convert into months? Divided by 30 days in a month. On an average, we think 30 days is of a month. So 120 days divided by 30. So that comes to 4 months. So this will be 4 months. So leave credit came to 4 months. Multiply by whatever is the average salary. See, right now you just understand how to do it. But the concept involved, there are many questions should be there in your mind. Why this 10 months? I will explain. I have got answer for everything. But right now just understand the mechanism which government has made. Okay. So tell me one by one each amount whether you can find out or not. This 25 lakhs you have to buy heart. There is nothing to find out, it is fixed. Okay. Actual amount received will be given in the question. 10 months is fixed. Why? What is the logic? I will tell you. It is fixed. Multiply by average salary, how to find? You will prepare month column where you will write 10 months, including the month of retirement also. Then basic salary column, DA column, in terms, turnover commission. Then you would add all 10 months figure divided by 10 like we did in case of gratuity in the last lecture if you remember. Okay. Some same, but only thing is in gratuity we ignore the month of retirement. Here you will count the month of retirement. Rest all is same. Okay. And then leave credit, how to find? Leave credit is nothing but what you know. In his account, how many holidays are remaining, how many leaves he has saved. So how to find that? That depends upon leave allowed minus leave taken. And your leave allowed should be as per government rule. In the question they will say, his employer used to allow him 35 days holiday. Ignore it. His boss was allowing 35 days. But we have to go as per boss or government? Government. So as per government it is maximum 30 days. And when I say maximum means not more than that. Tell me if in the question they say his boss was allowing 22 days holiday. Then 22 days is in limit. Then take 22 only. See, when we say maximum, means it should not be more than that. That's a warning. It's a limit. Maximum. That means if it is less, take less only. Some students become so fool, they stick to 30 days that in the question, even if they are giving, his boss was allowing 25 days, still they take 30. Now, boss is allowing 25 days, that means it is within 30 only. So, take 25 only. So, maximum means it should not be more than 30. That means if your company is giving less holiday, then take less only. Okay. And see why I have written 1 month, because sometimes in the question they give you the data in months. So you will take 1 month. For example, in the question they say he has taken 13 months holiday throughout this service. The question only is like this. How? That he has taken 13 months holiday during his service. Now in the question they have given months. Then don't take 30, take 1 month. And then you have to see how many years service he has done. Say for example his service is 20 years. So multiply by 20. So that comes to 20 months. And he has taken 13 months. So how much leave he has saved? 7 months. And it is already in months now. Anyways, what did I say? This amount has to be in months. In short, see, this 1 month I have taken. Why? If the question is in months, take 1 month. But if the question is in days, take 30 days. But that is maximum. If the question has got less leave allowed, take less only. And this I have to multiply by number of years. Why I have to multiply? Because 30 days leave should be allowed in a year. So if you work for 10 years, 20 years, so you multiply by that. But sometimes your service is in fraction. So ignore the fraction. In case they say he worked for 20 years and 9 months. Ignore 9. Whether the fraction is more than 6, less than 6, ignore the fraction. Simply take the completed years, ignore the fractional year. Okay. See, still I have not explained the concept behind all this thing. But right now you understand the technique. This is the way you have to solve. Okay. Now I'll do one thing. I will immediately take one question. In that question, I will explain the logic behind everything. Okay. And you should have the habit of thinking on your own. Like, what should be the logic for this 30 days? Okay. And then, what is this 10 months? What is the logic of all this? Okay. That you should try to think on your own. Eventually, I will explain, but you should have the habit of thinking like that. Okay, so this is the theory. Now we will do one thing. We will take one question. It is question number 5. Question number 5. Keep this statement ready. Statement of income from salaries. Particulars, inner column, outer column. Ready? Read. Mr. X retired. Circle the word retired. Underline the date. Make a policy. Whenever retirement comes, circle the word retired. Underline the date. And whenever the question is of retirement, you have to draw a timeline. See in the timeline what I have written this thing. Wait, let me explain this thing and then you can start drawing this thing. See, his basic salary was 10,000 up till September. So can you see this September here? Up till September it was 10,000 per month. After that it became, see, after that it became 12,000 per month. So 12,000 per month. So draw like this. Retirement date is 31st December. In this area, on this right hand side, you should always write pension, huh? Because pension will come in this period after retirement. Done? So start basic salary, how much then? From April to September, it is how many months? 6 months. So 10,000 per month into 6. That comes to 60,000. And this 12,000 is multiplied by 3 months. So how will you present? See, like this you will present. $10,000 into 6 months. The 6 months is up to September, it was 10,000. So April, May, June, July, August, September. So 6 months it was 10,000. Then he got an increment. His salary increased to 12,000. That is from October. So October, November, December, and then he retired. Return basic salary. Then DNS allowance not forming part of salary. Means this is not in terms. But tell me, right now, should I think whether it is in terms or not in terms? See, right now, how we should think, whether in terms or not in terms. It is an income for me and it is taxable. And this income is an allowance. And any allowance which doesn't fit in TC hut, TC udar, it is taxable. Right now, it should not bother you whether it is in terms or not in terms. But when we use the formula, that time our slogan is what? In terms, in formula. Not in terms, not in formula. But at the time of formulas. But right now when you're recording DA, record whether it is in terms or not in terms. But 6,000 is per month. Multiply by how many months? 9 months. Because after 9 months he retired. Then next is gratuity. Now see, for gratuity, see, the way I have given you the chart, you should think like that only. The chart is a line of thinking. So how the chart was? Government employee, POGA employee, other employee. So check who is he. If he is government employee, they will write. If he is POGA employee, they will write. If you remember last lecture, what did I say? POGA hoga, likha hoga. Means if he is POGA, they will write in the question. So they have not written. That means he is other employee. But for other employee, the formula is what? 15 upon 26 or half? That half type formula, okay? And since the formula is big, we will prefer a working note. We will prefer a working note. So in the main statement, you will just write gratuity inner column and then what? Then what? Say less. No deduction. That's why I was asking you when to use the word deduction. If it is expenditure. Now did you realize while explaining income from other source, I clearly distinguished that if there is some expenditure, you write deduction. But if some income government says, okay, we will not tax this income, then exempt. So for gratuity, we are not deducting any expenditure. So first write gratuity, then don't write deduction, write exempt under section 1010. See, up till now deduction word we have written only at two places. In income from other source, whenever we found expense, deduction under section 57. And in income from salary, after you total up the statement, you write deduction under section 16 for standard deduction, entity allowance, profession tax. So everywhere don't write the word deduction. So less exempt under section 1010. And then we will go to working note. You can leave one almost full page, you can leave there. Even if some space is left at the end, let it be, leave that page. Go to a working note. Say my working note is ready. Have I written the correct formula? Since the employee is other employee, I've used the formula accordingly. This place is blank because here I will substitute the amounts. Gratuity half into salary per month into number of years. Then leave some space after that because we will have to write the figures. Actual amount received, it can come here only. Actual amount we can write right now. What is the actual amount of gratuity? In the question, what is given? 5 lakhs. And the maximum limit, do you remember 20 lakhs last lecture we did? Some students were absent last lecture. 20 lakhs, okay. Okay, now we are waiting for what? Half is ready, but then into salary means what? In POGA employee, what was that? Speak out. I know everything. You have to speak out. Yes, in POGA employee, it was latest basic and latest DA both. Whether in terms, not in terms, anything. But this is the other employee. So here it is average of preceding 10 months. Right now we are doing it for gratuity. So you'll ignore the month of retirement. So what was my style if you remember last lecture? In the month column I will count and go to 11th line. See here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. And in the 11th line I will write retirement month. And I have to skip that. Preceding means you have to ignore the month of retirement. See this, I have written properly or not? See, you should go reverse so you will not make mistake. Because we have already reached on the 11th line. 11th line we have ignored. So now we are left with exactly 10 lines. Which will start reverse from November. November, October, September, August, July, June, May, April, March, Feb. This way 10 months. This 10 months is a fixed rule. See, we cannot take average of the whole service because when he joined the job, his salary was so less. So data which is very old is not relevant. We want is recent data, recent service data. And recent means 10 months. Government could have said 9 months also, but that's okay. Something has to be fixed, whether 10, 9. The logic is recent salaries average. So in his recent 10 months, what was the status of basic? Up to September it was 10,000. Up to September it was 10,000. Then from October it became 12,000. Actually he has received salary for December also. Huh? Salary he has received. But in the working we have to ignore. Salary obviously he will receive. Take it on you. If you work in a company, if you work till last day of December, you will take your salary and go. But for the purpose of average, we ignore the month of retirement. Then what about DA? DA should be taken if it is in terms. In our question, it is what?
Not in terms.
See, not forming part of salary means not in terms. Not in terms, not in formula. So this will not come, not. And what about turnover commission? Not in sum. That was not in terms. That this is not in sum. And not in sum, how will we take then? Turnover commission is not in sum. DA, turnover commission, everything nil. So basic salary on an average it is 10,400. Getting that? Add all 10 months salary divided by 10, that will give us average. Plus nil plus nil. So what is my average salary? 10,400 per month, okay? Now wait, see this. Where will you substitute this? Over here, okay? So transfer this amount there, and then number of years of service. Wait, in number of years, what was the exact service?
24.9.
24 years, 9 months. But you have to ignore the fraction completely. It is only in POGA employees we round off. If you remember, I said POGA round off hoga. And POGA maybe कब होगा if fraction 6 months से ज़्यादा होगा. I have to say in Hindi because it rhymes in Hindi. POGA round off hoga. Means if he is POGA, then only you have to round off. But he is not a case of POGA employee, so ignore the fraction. So 24 years. So that comes to how much? 1,24,800. And then 1, 2, 3, whichever is less. So out of the 3, what is less? 124,800. So this you will minus here. Look. Check, have I done properly? Less exam under section 1010, 124,800. And here, there you mark note 1. If you have done something in working note, you have to relate it with the note. See, I am having cut to cut space, so I might not be writing everything in detail. But you write here note 1. Okay, then,
Leave salary.
okay, now leave salary. Yes, this is important. Read. Leave salary 4,90,000. He was entitled to a leave of 35 days every year. But he actually availed leave of 390 days during the service. Wait, what do you mean by entitled?
Allowed.
Yes, he was entitled means he was allowed. Means he had the right to take this many holidays. Entitlement means your right. You are allowed. So do one thing. Underline the word entitled and write the word allowed. So he was allowed a leave of 35 days every year. Tell me, giving 35 days holiday in a year, is it reasonable? No. As per government's thinking, in a year, maximum 30 days holiday should be given. But here the company's rule is abnormal. So what to do? We will restrict it to 30 days. What if this 35 was 25? Then take 25 only. See, maximum 30 days means it should not be more than 30. If it is less, then okay with less. Okay. But here 35 days is too much. And you know what government said? Look here. Government says if you allow 35 days holiday, 40 days holiday, if you allow only so much of leave, employee will save more leave and he will get more money. You can give him more money. We will not exempt him fully. Understood the thinking? See what government says, you give him 35 days holiday, 40 days holiday. If you give only so much holiday, employee will save more holidays. And if he saves more, he will receive more leave salary. Let him receive. After all, boss has to give money. You give him. But right now it is a matter of exemption. For exemption we feel 35 days holiday is too much. A person should get maximum 30 or less. And according to that, if anyone is receiving the amount, we are ready to exempt also. Okay. See, partly exempt means what? There is a limit. So this is a limit only. Okay. But then what do you mean by this? He actually availed. Availed means taken. See, when company gives you facility and you use the facility. So what do we say? I have availed it. Availed means you use the facility. Which facility I am talking about? Leaves, holidays. So how many holidays he has used? 390 days. But tell me, is 390 days a record of 1 year of full service? Obviously, it cannot be a 1 year. In a year, there are 365 days. This is during the service, means it is during the whole service of 24 years. He has taken total this much leave. Do one thing, underline availed and write there taken. Please write this there because this has come to me as a doubt later on. When I am teaching that time, students don't pay attention and later on this only comes as a doubt. Sir, what do you mean by availed? That's why I make it a point you write there. Availed means it is leave taken. Okay, now tell me, wait. Whenever leave salary comes, what should be your line of thinking? See, your chart is the line of thinking. So first you should think, is it encashed during service or on retirement? Check. Check, you will come to know. Is it happening during service or on retirement? Retirement, see, employees retired. See, if the question wasn't of retirement, then we can say it is happening during service. Then it is fully taxable. And then it becomes very simple also. Because fully taxable means you have to simply write the amount in the outer column. So here it is not encashed during the service. Here it is on retirement. And now you have to check, is he government employee or other employee? He is other employee. So we will have to use this formula. And since the formula is so big, we will prefer a working note. So what will you do? Tell me orally first. First you will write leave salary in the inner column, then exempt under section 10(10) AA. And then the formula will go in working note. Okay. Note number 2 we will make for this. Leave salary 4 lakhs 90,000. Wait, how much it was in the question? It was 4. Did you see in the question it was 4 lakh 90,000? Did you understand why did he get this much amount? Because company might have allowed him holidays, but he didn't take holiday. And when you don't take holiday, you can encash your leaves. And this is the cash which he has received, 4 lakhs 90,000. Okay. Now let us go to working note. See, my working note is ready here. Can you see? Leave credit into average salary per month. Then you have to leave some blank space because you will substitute the figures over there. Then 10 months into average salary per month. Actual amount received will be given in the question. What is the actual amount he received? 4 lakhs 90,000. And there is one fixed amount 25 lakhs. See, right now it is fresh, but you have to remember everything till exam day. Problem is this only, that as you go ahead, you keep forgetting the things which was taught earlier. That's why every lecture I will take up retrospectively right from the first chapter. Okay, now one by one, we'll do one thing. Look here. First, we'll find out average salary. And then what we'll find? Leave credit. Okay. And your average salary means what? You have to ignore the month of retirement, or you have to consider. But see, you have to consider provided he has worked for that full month. Wait. Consider means, look here, wait. When did he retire? 31st December means December 31st. He worked for full December. So it should be countable. See, if it would have been 1st December, then as good as December has to be ignored. Many students, you know what blunder they have done? If it is 1st December also, they say, sir, you told us to count the month of retirement. Count, but it should be countable. If someone leaves the job only on 1st December, so he was not there in the company in December, so why to count forcefully then? But in our question is work till the end of December, see 31st. And since you have worked for full December, he has worked for that month, so you have to consider it. So consider means it should be considerable. So tell me once again, if it would have been 1st December, then your counting will start from November only. Okay. But since we work for whole December, you will take December also, then November, then October. This way backward how many months? 10 months. Okay. See, some student has a doubt. What if it is 15 December? Then you will take half of December. And other half will come from some other month. But they don't put the question in fraction like this. Because unnecessary complication will start. They are not testing your maths. They are testing a tax. But the doubt is good. What is the doubt? That if employee has retired on 15th December, in the mid of December, so you work December for half month, so you count half month of December. Okay. And whenever you have to convert monthly salary into days, consider month as 30 days only always. Then proportionate half month will come from somewhere else also. Okay. But don't worry, just because she has asked me the doubt, I have to answer. Because see, wait. Law has written what? Read. Up to the date of retirement. Up to the date means if someone is retired on 5th December, till 5th December you have to catch. So 5th December means 5 days salary. And another 25 days you have to take from some other month. But don't worry, such thing has never come in any exam. And firstly, practically when employees retire, they retire after completing a month. They will not retire on awkward date. Yes, when we are studying as a student, anything comes to your mind. But everything I have an answer, don't worry. But then practically it will not happen also, and it will not even come in the question. Till now in the institute's paper or study material, they have not given such odd date. So it will be either first of the month or last day. And if it is last day, then full month has come to a picture. So that month you will count. And that month you have to count and take backward 10 months. So tell me, my 10 months journey will be like this. See. See, December I have put tick mark. Can you see in my working? See, here I have written R for. Can you see this? Yes. This R stands for retirement. So he has retired on December. That also on the last day. So you have to count full December. So counting December. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. The 10th month backward is March. Then put the figures. This average salary will be little different than that of gratuity. Because in gratuity we ignored the month December. There the average salary came to 10,400. Here it is 10,600. And see, this problem arises when when your salary has changed. Can you see, this employee's salary was 10,000, then it became 12,000. But imagine what if his salary was constant? Then actually you can avoid this working. Imagine if someone's salary is 10,000 only since long time. So 10,000, 10,000, 10,000, you add 10 times, divide by 10, you will get 10,000 only. So when is this working useful, when employee salary is changing? And deliberately I have taken such question where the salary is changing so that I can teach the importance of average. But in past paper, if you see many times, they have given a question of constant salary. His salary is not changing only. So tell me, in this question also, if his salary would have been 10,000 only from the beginning, so in the preceding 10 months, if you take average, it will come to same. Then don't even waste the time in doing this working. Directly take the basic salary, whatever it is. This working makes sense when If the salary, there are two salaries in the question. First it was this much, then it became this much. Then only it makes sense. Okay. And DA and turnover commission not taken by, because in the question DA is not in terms, not in formula. And turnover commission is not in sum. So this is your average salary. So substitute this amount. See here in 10 months formula also it will come. See this. 10 months multiply by average salary which we found right now. What is the logic of 10 months? I will explain. Let me finish first. 10 months into 10,600, that comes to 1,06,000. Okay, here also you can write 10,600 where in the first amount, but we have to yet find the leave credit. Now what was the formula for leave credit? Look here and tell me, what did I explain? Leave allowed as per government rules. Okay, minus leave taken. Okay, so go as per that. Leave allowed as per government rules. Write this way. See, I have done the working here. Leave credit is equal to leave allowed. You can write in detail, leave allowed as per government rules. I have not written because I don't have space over there. You write full. Leave allowed as per government rules. Do it, show this working separately, show this working separately. Okay, then tell me what is the leave allowed as per government. As per the government, how many leaves should be given? See, his boss is giving him 35 days, but that is too much. For this, what statement has said? If you give so much holidays, they will save more, they will receive more, but we will not exempt everything. They will receive, you will give, you have got lot of money, you give to your employee. But exemption is up to a limit. And our limit is he should not be given more than 30 days holiday. So according to 30 days holiday, how many leave he has saved? Find out. So see, wait, as per government 30 days leave should be allowed, but 30 days is 1 year. 30 days is for your 1 year service. And this guy has done service of, and your fraction you have to ignore. So for 1 year service, 30 days. So for 24 years service, how much? Can you imagine every year 30 days for 24 years, how much? Yes. And how much he has actually taken? Yes, so see what I have written here. Check. Is it right? Max 30 days holiday should be given, but the 30 days is in a year. So you will multiply by number of years, which was 24, and year fraction should always be ignored. And 390 days is leave taken, which in the question they had given as leave availed. Availed means taken. So this comes to 720 days minus 390 days. That comes to 330 days. But you cannot keep leave credit in days. Why you have to convert into months? Look here, look at this. Because this you have to multiply by average salary per month. And something which is per month will have a multiplication of months. Okay. So how will you convert this into months? Divided by 30 days. That comes to 11 months. So 11 months multiplied by what? 10,600. So 1 lakh 11, sorry, 1 lakh 16,600. Then out of these four amounts, you have to select whichever is less. So the least amount is 1 lakh 6,000. Okay, now wait. You will have to wait now. Okay, see, what is the logic of this 10 months? And what is the logic of this 25 lakhs? So see, pay attention carefully. In leave salary, actually government has kept three limits. First, you know why government is putting limit? Because look, if the employee is a government employee, there is no limit, fully exempt. But for private sector employee, there is a limit. Why? Because private sector people, they spend lavishly on the staff sometimes. See, every boss is not that generous, but who knows in private sector, imagine I'm a very rich person, I might be giving handsome salary to my employees. So in private sector, what happens, sometimes the rules are very lenient and liberal, they give more and more amount, but government says we don't want to exempt fully then. See, in government job, you never get abnormal amounts. You get remuneration, everything in limits only. So that's why it is always fully exempt. But in private sector employee, there are chances that boss might be lenient, liberal, he might be giving lot of money, but government says, sorry, we will not exempt fully. Your boss is generous, he is rich person, he might be giving lot of money to you, but exemption we will not give you fully. That is one limit. And here three limits are there. Tell me what are the three limits? In first limit, government said you should not give holiday of 30 days in a year. And our company was giving how much? 35. So what government says? You give 35 days holiday, you give only so much holiday, so they will save more holiday. They will receive more. You give them more, but we will not exempt more. So we want it as per 30 days. Okay. Then as per 30 days also, at the end what he has saved during his service, it should not be more than 10 months. You are not seeing what I have highlighted? See my highlighting. As per 30 days also, whatever leave he has saved in his service, in our example, 11 months, it should not be more than 10. Actually speaking, going as per 30 days means we are going as per the limit. But government says it's okay, 30 days is in the limit only, but then we have got one more limit. Our second limit is what? That this 11 months which you have arrived, it should not be more than 10 months. That's why in the formula they have kept 10 months. See, here it is more than 10 months, but you don't do anything. You don't act over smart in the exam. Your heart knows that this 11 months is too much, it cannot be more than 10. But formula will take care. Because in the formula, who is going to win? Whichever is less. And if you put this 11 against 10, what will be less? 10. So, this is just for understanding. I am saying this 11 months which you got, government says it should not be more than 10. Now, third limit, that 10 months also, when you multiply by salary, it should not be more than 25 lakhs. In short, a student has to understand government has put three limits. Limit one, that in a year, more than 30 days holiday should not be given. And then as per 30 days also, the leaves which you accumulated, it should not be more than 10 months. And for 10 months, when you multiply it by salary, it should not be more than 25 lakhs. And it can exceed because private sector people give lot of salary sometimes. So 10 months salary can become 35 lakhs also because company is giving so much salary. So law says private people, you are rich people, you give lot of salary, but we will not exempt. So although 10 months comes to a reasonable number, but then you give so much salary, so 10 months into salary can become 35 lakhs also, 40 lakhs also, but there we have a limit of 25 lakhs. This is the understanding of the formula. Eventually you have to buy it and solve. But then see, if you understand everything, you will never hate the subject. But if I ask you just buy it, just buy it, just buy it, how many things you will buy it? This is just the beginning. There are so many things. And if you keep buying without understanding, one day you will start hating the subject. Okay? And that I don't want. So understand the logic. Okay? But see, when a student has got lot of knowledge, he makes blunder also. Like I have seen in my past experience, some students what they do, if this is 11 months, they change it to 10 only here. Here you don't do anything. Let it be 11 only, na? See, even if I write 11 here, 11 will not get importance. In the formula, who gets the importance? Whichever is less. So automatically, this 10 is fixed. The purpose of fixing 10 here is what? So that your leave credit, if it comes to 11, 12, 13 months, it will not win. Who will win in the formula? 10, whichever is lower. And this 25 lakhs says, sometimes this 10 months figure will also lose because 10 months into salary can become 30 lakhs also. But then 25 lakhs. And actual amount received is less in the limit than fully exempt. Okay. So there are three limits here. One is 30 days, other is 10 months, and the last one is 25 lakhs. And it is step by step. In a year, maximum 30 days. And as per 30 days, the leave which you accumulate should be maximum 10. And that if you multiply by salary, it should be maximum 25 lakhs. So if it is coming in the limit, we are ready to exempt. Law says we don't have any, you know, animosity with the other employees. And we don't have any special love for government employee. We are exempting government employee because they get things in limit only. So we are exempting, but other employees we never know. They might be getting abnormal amount, so we have to put limits. So this is done. Then what is left in the question? Question is not over yet. Wait. Did you do all these things? Did you finish this thing? Leave salary, inner column this much and minus 1,06,000. Balance in outer column 3,84,000. Okay, now pension is simple. Try. Do one thing, underline this. Wait, I want you to do this thing. First, circle this and underline out of which. His monthly pension was 1,000 per month. This you should imagine as if boss has offered him. And one way boss is telling him, tell me how do you want it? You want it like this only? 1,000? Or you want lump sum? Or you want partly? So what did he choose? Partly. See what is written. His pension was 1,000, out of which he commuted 40%. Out of which means out of what? Out of 1,000 only. So thousands 40% you will calculate. So draw like that. In the last question, how I drawn? See, start drawing like this. See like this. Go to a working note. His monthly pension was 1000 per month. And then they are writing out of which means out of 1000 only. 40% is commuted. The word commuted means your monthly gets cancelled. You will get a lump sum amount in one shot. So 40%, 60% comes to how much? 400 per month, 600 per month, correct? 400 per month, 600 per month. And 400 I have cancelled. Commuted means cancel monthly. I want lump sum. $400 cancelled and you got lump sum of 1,60,000, correct? But now this 400 rupees you have to forget it. You have got a big amount for this. And what about 600? Uncommuted means it will remain unchanged. It will remain per month only. And this you will keep getting throughout your life. But right now, are we preparing statement of his whole life or till March? Till March. So till March, how many months? See, after December, how many months are there? Jan, Feb, March. So it is a matter of 3 months he got. So this you will multiply by 3 months. See, I have written here 3 months. Then how will you show the presentation? Write pension and then in two parts, two arrows. Uncommuted, commuted. Uncommuted directly in outer column. See, relate with the theory. What did I explain for uncommuted today? It is fully taxable. So directly in outer column. Commuted, you will write it in the inner column. Pension. First uncommuted 600 per month into 3 months. So that comes to 1800. Okay, now what about commuted pension? If he is government employee, then fully exempt. But he is not government employee. So there were 2%, 50% or 33.33. That depends upon whether he received gratuity or not. So tell me in our question, has he received gratuity?
Yes.
He has received gratuity. So he is not sad. His boss is not bad. Okay. So we will give him more exemption or less? Less. 33.33333 by cross multiplication. So accordingly see, if 40% is 1,60,000, 33.33, how much? Cross multiply. And better you present like this only. See how I have done. Can you see the way I have done? First write 1,60,000 in the inner column. And near 1,60,000, write 40%. It was given in the question that he commuted 40. So near 1,60,000, write 40. And below 40, 33.33. While writing in the notebook, you can just write 33.33. But in the calculator, you take Maximum 3s. So 1,60,000 multiplied by 33.3333333333 divided by 40. Now what you get, don't keep it in decimal. Now round it off. Did you notice what section I have written? 1010A. Please pay attention on the section. Gratuity was 1010, pension 1010A, leave salary 1010 double A, and 1011 SPF, lump sum amount. Also interest on PPF 1011, 1012 RPF, provided 5 years service. Okay. So cross multiply and outer column you will get 26,667. That's it, then total up. Gross salary less deduction under section 16. Done. Now check the status of the chapter. Ready? What is the final answer there? 887 667. 887 667. That was the answer of question 5 which we did. Okay. Okay, now see, check the status. See, here we are going in this line. So tell me what we have done till now. We did basic salary, which is always taxable. If net basic salary is given, convert into gross. Allowances, if any allowance comes, we have to search in TC Hut, TC Udar. If we find in TC Hut, TC Udar exempt, otherwise taxable. Entertainment allowance had a special treatment. Government employee like this and like this. And non-government employee only on the top. No deduction. Okay. And what was the formula for government employee? 1/5 of basic salary. Actual amount received in 5,000, which is less. That was entertainment allowance and allowance. Then provident fund, SPF, RPF, UPF. There are 3 provident funds. In SPF, when money is accumulated, that time also exempt. When you receive, that time also exempt under section 1011. But in RPF, when the money is accumulated, that time partly exempt, partly taxable. But when you receive, fully exempt under section 1012. But in UPF, when the amount is accumulated, that time exempt. But when you receive, it is taxable. Thak. 4 parts. Employees' contribution ignore. Interest on that, income from other source. Employer's contribution, interest on that, income from salary. All are taxable, okay? And then we did gratuity. Government employee, POGA employee, other employee. After that we did pension. Uncommuted, taxable. Commuted, exempt. Government employee, fully exempt. Other employee, 50 or 33% by cross multiply, depending upon whether he received gratuity or not. Then we did leave salary. Encashed during the service, taxable. But if you accumulate the leave and encash at the time of retirement, then exempt. Government employee fully exempt. Other employee 1, 2, 3, 4, whichever is less. And then next in order is voluntary retirement compensation. So first you have to understand what is voluntary retirement compensation. And then eventually taxable or exempt. So tell me, what is voluntary retirement compensation?
When employee himself says that he wants to retire.
Correct? See, voluntary means what? Is it compulsory or it is your choice to leave the job? It is a choice. See, actually, voluntary retirement scheme is preferred by companies who want to reduce the staff. See, understand this concept properly. Imagine I am a big company, I have got many employees. And sometimes what happens? You keep recruiting new staff. And one day you realize that you don't need this much staff. And handling so much staff is actually a burden. It's a headache. So many times, what company thinks? Now how to reduce the staff? It has become a challenge. And they cannot ask the employee to get lost, get lost, get lost. If they simply remove the employee, it will spoil the reputation of the company. So what companies does? Whenever they feel there is more than necessary staff, there is a burden of overstaffing. So what they do, they give an offer to employees of money. Imagine this is money, huh? Assume this is 25 lakhs, 30 lakhs. So company will offer a big amount. The one who leaves the job, he will get 20 lakhs, 40 lakhs, 50 lakhs. Such a big amount is offered. And those employees who are greedy, they will feel company is offering me so much amount, so let's leave the job. They will voluntarily leave. And company is also smart. What company is saying? We are not forcing you. You want, you continue the job. But if you leave, you will get 25 lakhs. 25 is just an example. Or you will get 30 lakhs. If you leave, you will get this much amount. If you don't want, you don't go. Voluntary. Voluntary means it is not compulsory, it is optional. So company has given such an incentive of 20, 30, 40 lakhs. So in that, greed, many employees will leave the job. And if they themselves leave the job, at least no one will blame the company that we were removed from the job. They themselves left. And why did they feel like leaving? Because of the greed of money. But that money which company has to give, it becomes a big expenditure for the company, but company doesn't mind. Because they feel at least forever the staff is less now. Otherwise, handling 1 lakh employee, whereas we need only 50,000 employee, how to manage that? So no doubt company has to give big amounts to the one who is leaving the job. But that is a one-time cost. At least handling so much of staff, that liability they don't have to take further. So in short, if someone asks you, what is VRS? So first you should say the full form. Voluntary Retirement Scheme. Scheme, S for scheme. And then if someone says, why this, what is this, what is the purpose of the scheme? So what is the purpose? The purpose of the scheme is to reduce the staff. To reduce the staff so that the burden of overstaffing is relaxed from the head of the company, okay? Now, the main point is what why company did, forget it. Eventually, the one who leaves the job in VRS, he is getting a big amount. So think from employee's point of view. Don't think from company's point of view. From company's point of view, think company has income from business, and income from business is a separate chapter. In this chapter, we are thinking from an employee's point of view. So think from employee's point of view. When company offered him such big amount, and let's assume he accepted. So for him it has become an income. And where there is an income, we think of taxable exempt, but this is exempt under section 10(c). But here again there is a formula. 1, 2, 3, 4, whichever is less. Whether you are government employee or private employee, for all the rule is same. It is exempt up to a limit, and the limit is 1, 2, 3, 4. There are how many amounts? 4 amounts. And out of the 4 amounts, you have to select the one which is lower. Okay. Now, by now you have become expert. As you know, in this 4 amount, 1 amount will be a standard amount and 1 will be actual amount. So let's see that first. So our job is simplified. So one is a fixed amount, 5 lakhs. See, 5 lakhs means what? You will not get exemption of more than 5 lakhs. Maximum 5 lakhs exemption. But yes, If these amounts are less, then you will get less exemption. But maximum you will get 5 lakhs. And what if this amount is 2 lakhs only, some amount? Then 2 lakhs, whichever is less. So 5 lakhs is the maximum exemption, actual amount received. Now these two amounts you have to understand. See, first amount is your salary per month into fixed 3 months into number of years of completed service. See, in VRS, employees' retirement age has not come. VRS means what? Your time of retirement has not come. But before time, company is asking you to leave. And they are not forcing you. They are giving you incentive of money. If you leave, it's fine. If you don't leave, you continue because your retirement age has not come. See, in VRS, what happens, you are retiring premature. Before that age comes of retirement, you are retiring before that. So, whenever you are retiring, we have to see how many years of service you have completed. So, for example, an employee has completed 10 years of service, so this you will multiply by 10 years. And this 3 months is fixed. Logic I will tell you, multiply by salary per month. Okay. And then second amount is, what is the remaining months of service left? As I said, in VRS, employee is retiring on that age of retirement, or he is retiring before age? Before age. Let's assume his age to retire was 58 years. Do you know in every company they fix an age?
Yes.
That at this age you will have to retire. Because we don't keep old people. And that age can be 58 years also, 60 years also. Nowadays many companies keep 58 years only. Because they feel 58 years means you have become outdated now. But some companies fix the age of 60 years. But that is a retirement age. But in VRS, are you retiring on that age or you are retiring before age? So we know how many years service was left. So see, we will have to see what was the remaining months of his service. So let's assume his retirement age was 60 years. And he took VRS in 50 years age. So what was his remaining service? His age of retirement as per the rule of the company was 60. But in VRS he left little early, say at the age of 50 years. So what was remaining? 10 years. But 10 is years. Convert into months. 10 years means 120 months. So here I will write 120 months. And this you will multiply by fixed 1 month and salary. You know what is the difference between first and the second amount? Here we are writing the completed years. And in the second we are writing the one which is completed or remaining. Remaining. And years or months? Months. And you know what is the logic of all this? Because in real life, all the companies, when they give you VRS money, their approach of giving the money is like this only. Some company give you based on your remaining service. Some companies, what they say, if you would not retire before age, you would have worked. So how much salary you would have got? Take it right now and go out. Yes, the companies are like this. What they say, that you have to retire before age. If you would not have retired in VRS, you would have worked here. And by working, you would have got salary. So take that salary and leave now. People do like this only. Means whatever remaining service is left, that much salary they give you. This happens in real life. Now a student finds it little surprising. Sir, why they are doing like this? They are giving him salary. If they want to give him salary of the remaining service, let him work. But see, if he works, he will get a full package of salary. And if he is asked to get lost right now, he is given basic salary, DNS allowance, limited things. But if he continues like an employee, I will work and get the salary, then he has to be given a full package. And many companies provide him a flat, a car, a mobile, many things have to be given. And then his salary is subject to increment also. So asking him to work is burdensome. It is better whatever is his current salary, we tell him your current salary, based on that whatever service was left, take that much salary and leave. And company do like that. So that is what is written here. But imagine if the boss is very generous, if they say you have got 20 months of service left, for each month I will give you double salary. So that is too much. Double means single salary should be given. See, 1 month means 1 month. Actual amount can be anything. See, actual amount company decides. Imagine if I am the company, I can tell my employee that your 14 months service is left. I will give you double salary of that. 14 months salary double means 28 months. Take that and leave. And you know why company wants to get rid of employee? Because if they continue, they will have a lot of demands. Bonus, increment, this, that, so many things. And if company asks them to get lost right now only, they have to give some limited amount. They give based on basic salary, etc. only. Huh? They don't give the full package. In short, what I am trying to say, company might prefer to give him double of his remaining salary. But law feels that is actual. But we feel single salary should be given for his remaining service. Single means 1 month. Actually, there is no point in multiplying by 1 month. When I say salary per month, it is 1 month only. But what law is trying to say, see, you might be giving him double salary for his remaining service left. You give. But we feel giving him single salary of his remaining service is reasonable. And what is reasonable, we will exempt. But that reasonable amount should not exceed 5 lakhs also. But see, these are companies who settle the employee based on remaining service. But there are some companies, you know what they do? They don't see what is your service left. They see how much you have worked for us. So for each year of service, they reward him 3 months salary, 4 months salary, 5 months, anything. But law feels 3 months is sufficient. 3 months is for 1 year's job. Huh? 1 year. For example, an employee has worked for 20 years. So for each year of his service put, we will reward him 3 months. Means in a year there are 12 months. We are not giving full year salary. That will amount to foolishness. 20 years he worked, he got the salary. Now full 20 years salary we will not give. 20 years we will have actually how many months? 20 years into 12 to 40 months. That much we are not giving. But for each year which he has put for the company, 3 months should be given. Actually they might give 4 months also. But 3 months is reasonable. In short, see, actual can happen to any level. Because actual money is to be given by the boss. And boss has got lot of money, he can spend lavishly. But exemption goes as per the reasonableness. And if someone gives based on completed service, this is reasonable. And if someone gives based on remaining service, this is reasonable. That's it. In short, see how to remember the formula. Salary per month, 3 months, 1 month, then years and months, completed and remaining. The big difference is what you know, here you are taking the service which is completed. Okay. And here you are taking the service which is complete or remaining. And remaining service you will come to know, because maybe you are working in a company where the age of retirement is 60 years. And in VRS you are retiring at 55. So this way 5 years service was left, but don't see years. Here I want months. So if 5 years service is left, that means it is equal to 60 months. So here I will multiply by 60 months. And law feels whatever months of service are remaining, that much salary you give him. But single salary, don't give double salary. Some people might be giving double salary, but that will come in actual. That is abnormal amount, okay. So that's it. 1, 2, 3, whichever is less. This is voluntary retirement compensation. So if in the question it comes, what you will do? First you will write in the inner column. Then what we will write? less exempt under section 1010C. And then 1, 2, 3, 4, whichever is less. It is better you show all this in the working note only. And here this 3 months and 1 month is fixed. But above you have to take completed years, not months, years. And this will be remaining months. Okay, wait, but what is salary per month here?
Salary plus
Your latest basic salary, DA in terms. See, wherever I am writing DA, it is in terms only. Only in case of POGA employee, we take in terms, not in terms both. But everywhere it is in terms. So, basic salary, DA in terms, turnover commission. Latest. Means in case your salary is changing, so you will not take the old salary. What was the latest one at the time of retirement, that salary you will take, okay? So voluntary retirement compensation is done. Then next comes retrenchment compensation. You know what is retrenchment compensation? When company shuts down, when the business of the company is shut down, what company will say? We have closed. Now you don't have any place over here. Please get lost. All the employees are removed. So in English we say they are retrenched. To retrench means to remove the employee. But company is not becoming arrogant. Companies, they are not continuing the company only. They have stopped the business. So company says, see, we feel bad, but we don't have any option. We are making losses continuously. Sometimes the company is continuously making loss. They will not be able to run the business now. So they have to shut down. And when the company is shut down and all the employees are removed, we say they are retrenched. But company is heartful. They have a heart. They feel just because our company is shut down, so many people have become unemployed. Let us give them some money and then say get lost. And that is called retrenchment compensation. Means you are given compensation because suddenly all the employees have become jobless. Because see, employees were not knowing. Suddenly one fine day company is announcing that we have decided in board meeting that we will shut down the business. Now you don't have any place for work. You can search some other job. But then employee will get a shock. So for that he gets retrenchment compensation. And even this is exam. Because government says we don't want to tax such amount. Because we also feel pity on the employees who are removed. So they will be exempt. But how much? Again a formula. 1, 2, 3, whichever is less. One amount is 5 lakhs fixed. Actual amount received. And the first amount is amount calculated as per Industrial Disputes Act. You know why Industrial Disputes Act? Whenever a company shuts down and they simply remove the employees, they cannot do it easily. There is one law to protect the employees, and that law is called Industrial Disputes Act. And that law says companies, you cannot shut down like this. If you want to shut down, if you are asking the employees to get lost, you will have to give some amount. But how much amount? It is this amount. It is actually written in Industrial Disputes Act. For a student, it will be given in the question. But basically this act says what whenever a company will shut down the business, they will have to compulsorily compensate the employee for the loss of the job. But how much they should compensate, all that is written in Industrial Disputes Act. And that amount will be given in the question. And what income tax says, the amount which Industrial Disputes Act promises, that means it is the basic amount. That much we will exempt. But then if this amount comes to 7 lakhs, 8 lakhs, sorry, we can exempt maximum 5 lakhs. Because that is the limit with income tax department. Maximum exemption will be 5 lakhs. Although your Industrial Disputes Act might have promised you 8 lakhs, 9 lakhs. But maximum 5 lakhs. Yes, if this amount is 2-3 lakhs only, then it's okay. In short, 1, 2, 3, whichever is less. Amount as per this act will be given in the question. Actual amount received and 5 lakhs, whichever is less, okay. Actually, see, in Industrial Disputes Act also, the amount which should be given to him is same as gratuity in POGA employee, 15 upon 26. Remember last lecture I explained, as per Payment of Gratuity Act, employees should be given a minimum gratuity. And I had explained that 15 upon 26 logic. Same thing is there in Industrial Disputes Act also. Means if you are inquisitive to know how much Industrial Dispute Act has promised the employee. So it is the same. 15 upon 26 into salary per month into number of years of service. It is the same which POGA promises for gratuity. Same thing is promised as retrenchment compensation by Industrial Disputes Act. Means if you are inquisitive to know, this formula is same as POGA employees 15 upon 26. But anyways, usually they should give this amount in the question. Okay. So till note number 8 we have done. Okay. Now look. See, don't feel tired because see, up till now whatever you have studied, you have not done a great deal. God has given you that much capacity that up till a particular level you have the appetite to listen to the lecture. Your challenge and your performance starts when? When you are completely exhausted. At that time you have to show the performance, then you can say, I deserve to become CA. Because see, at the beginning of the lecture, when the lecture has just been done till 1 hour or 2 hours, every student will sit, whether below average student, above average, every student will sit up till a particular level or not. So that is the natural capacity of God given to you, and that's a God gift. You have not done a great job by sitting the lecture till now. But the moment you feel exhausted, now it's too much now, I cannot take it. That time if you accept it, that means that is your real performance. I know it's not that simple. At home also when you study, after 2-3 hours of study you feel exhausted. And naturally what a student will do, now I need a break. You should not take a break that time. That is a big mistake people do. Because you know what people do? They think 2 hours I studied, now I am feeling blackout, I am not able to receive anything, I will not be able to understand. So what is the point of the studying? Let me leave. And if you leave that time, your capacity will never increase. You know, when your capacity increases, only when you challenge your limits. You have to challenge it. Challenging the limit means what? Once you reach the limit of 2 hours of study, now I am fully exhausted. Challenge it. If you have studied for 2 hours, make it 3 hours, make it 4 hours. Yes, eventually it will happen that you are totally gone. You will sleep, that's okay. But you should not leave before you are completely, abused. You have to try to stretch as much as possible. But just because you feel, no, I am not feeling good now, I am little bit exhausted, leave it. That way your capacity will never increase. See, if a person is going to gym, and if he lifts the weight like this only, he lifts only what he can. So his muscles will never increase. He has to lift little heavy. Only if it challenges the muscle, his muscle will grow. So same formula applies in studies also, okay. There are many people I have seen in my gym, they are doing cardio, they have got lot of weight. Some have got weight of 90 kgs, 100 kgs. They just simply walk on the treadmill, okay. And little bit they are running also, they get exhausted and they leave it. But see, the moment when you are exhausted, if you leave that time, your capacity will never increase. So actually you have to stretch when you reach the limit. Then only your capacity will grow. And to set that example, even I am doing that for you. Why I do? Because I also get exhausted. But purposely, even after I am exhausted, I am stretching the lecture so that if I do this thing, I can inspire you to do. Otherwise, if I take my own breaks, I am tired and all, and if I expect from you should study, then that is wrong. Okay. So, you should feel as if the lecture just started now. Okay. Lecture is just started now. The lecture is just for half an hour. Okay. Less than that. It's 4:09 right now. Okay. Lecture is just for half an hour and the lecture has started. Actually, it's all psychology. It's all in the mind. If you tune your mind like that, you will be able to. Otherwise, if you ruin your mind, no, I am fed up, then you will know God will be able to help you. Okay, lecture has just started now. So last what we did last time, voluntary retirement compensation, retrenchment compensation done. Okay. Now one small thing is remaining, advance salary, arrears of salary, bonus. Okay. Now what is advance salary, what is arrears, what is bonus, and then we have to study whether it is taxable or exempt. See, genuinely feel as if the lecture just started. Huh? I also motivate myself like that only. Don't I get tired? My back also, you are sitting nicely. I'm standing here non-stop at one place. I am also growing old. So what we are studying? Advance salary, repeat. Advance salary, arrears of salary and bonus. Now see, advance salary means what? It is a salary of future. You got it now only. And why do we take the salary in advance? Because we are in need of money. For example, it is my son's marriage, my daughter's marriage. So I will request my boss, my salary of next year, give me now only. Next year you don't give me now because I am in need of money. So sometime boss will cooperate. Okay, take your salary in advance. So now the question is what? Since you have received the salary in advance, will it be taxable in advance or it will be taxable at the time to which it pertains to? The salary pertains to future, but you received in advance now. So should it be taxed in future or just because you received now pay tax now? See, there are two choices. It is taxable. See, it is a salary. There is no question that it should be exempt or taxable. I am talking about at what time. Because it is salary of future, should it be made taxable in future? Or the second option is, although it's a salary of future, but you received it now. So on receipt basis you pay the tax now. So for this there is a rule in income tax. Salary is taxable on due basis or receipt basis, whichever is earlier. What did I say? Salary is taxable on due basis or receipt basis, whichever is earlier. Logic of whichever is earlier is what you know. Government wants the tax as early as possible. Whichever event comes first. Event means if the salary has become due first, pay tax on due basis. Someone says I haven't received, forget received. Salary has become due, pay tax now. And vice versa. Someone says it is a salary of future, but you received now, pay tax now. Means whichever is earlier. Idea is what you know, government wants the tax at the earliest. So in short, tell me then what should happen with advance salary based on this rule? Advance salary will become due in future. Because advance salary means the salary of future. Salary of future will become due in future. See, salary becomes due when you work for the company. When you work for the company, that time it becomes due. So if you work in future, your salary will become due in future. See, I written the future. But you received now in present. So what is the rule? Whichever is earlier. Future is coming early or present comes earlier? Present. So it will be taxed on receipt basis. In short, advance salary is taxable. So whenever in the question you find employee received advance salary of next year, what you should do? Taxable. But yes, since you have paid the tax now, you will not have to pay it again in future. In future, you will get the credit. For example, next year's out of 12 months salary, 2 months I have taken in advance. Next year's 12 months salary, 2 months I have taken in advance. So 2 months I will pay tax now. So next year I will pay tax for only 10 months salary. Because 2 months tax I have already paid in advance on receipt basis. So remember this rule, taxable on due and receipt basis, which is earlier. So accordingly this amount, wait, let me write, advance salary is taxable. T stands for taxable. Because although it will be due in future, but it has received now, And which year is earlier? So which year is earlier? Okay, tell me, what if it is like this? This year's salary I have not received only. I will receive later on. Will I tell government I have not received my salary only? I will pay the tax when I receive. Now government's mentality is what? You wait for your salary. We cannot wait for the tax. Your salary has become due. Yeah, but I have not received. Forget receipt. It has become due. Pay the tax now, whichever is earlier. Means whenever your salary is outstanding, you wait for your outstanding salary. Government will not wait. Government wants the tax as early as possible. Yes, if you received before time, pay the tax before time. Okay, now arrears is totally different concept. Huh? You know what is arrears? Sometimes no, it is not that outstanding salary. Outstanding salary I explained. Outstanding salary, what explanation I gave? If your salary is outstanding, can you say government, it's outstanding, I will not pay tax now. Let it be outstanding. You wait for your outstanding salary. It has become due now. So on due basis pay the tax, whichever is earlier, right? Outstanding salary is done. Arrears is something different. Arrears means what you know? Sometimes there is a dispute about salary increment. Sometimes there is come on, be strong. Sometimes there is a dispute about your salary increment. See, with the example you will understand in 2 minutes. Assume since last 3 years, employee is fighting with his boss that I want increment. He is requesting, please make my salary 3,40,000. 3,40,000. This is what employee is wanting. But boss is saying, sorry, I will give you 3 lakhs only. You want to work, you work, otherwise get lost. Okay. So 3 years employee was requesting, I want 3,40,000, 3,40,000, 3,40,000. And boss was so adamant, he said, I will give you 3 lakhs only. Okay. You want to work, you work, otherwise get lost. But after 3 years, you know, employee got fed up. See, this is the past 3 years. These 3 years have gone now. Means assume in my example, since 3 years employee is fighting that I want increment. But now finally in year 4, you know what happened? Employee simply threatened the boss. What threat he gave? Now if you don't increase the salary, I am leaving the job. Boss said, why are you getting angry? Relax. You want increment? Don't worry, I will do it. Boss is also in need of this employee. So now employee was so angry, he said, finally I am leaving your job if you don't increase my salary. So boss said, okay, wait. How much salary you wanted? 3,10,000. No, 3,10,000. It was 3,40,000. So boss said, okay, relax, I will increase your salary from 3 lakhs to 3,40,000. Henceforth. Employer said, not henceforth. You have been boiling my blood since the past 3 years. I want settlement of my past 3 years also. I have been literally crying for my increment since last 3 years. Now so you will have to make it 340. You settle this past 3 years also. Means he wants retrospective increase. Do you understand retrospective?
Yes.
Means he wants the increment effective from the past. See, there are 2 types of increment. Prospective, retrospective. Prospective will increase from future, henceforth. But employee is so angry, he is saying, now so you will have to do 3,40,000. I want settlement of my previous 3 years also, for which my blood was boiling and you are always torturing me by saying no. Now you have said yes, so settle my past 3 years also. So boss said, okay Baba, I will settle everything. Henceforth it will be 3,40,000 and I will also give you the difference of past 3 years. So what difference it comes to? Every year he wanted 3,40,000. I am assuming the increment expected was 3,40,000. So see, in the current year, his salary has become 3,40,000 plus he will get something extra, 1 lakh. How did you get this? Settlement of past 3 years. See this. 40, 40, 40. And this is called arrears. So the word arrears, when it comes, you have to understand some dispute was going on. But the dispute is settled now. And since the settlement has come now, you will get the difference of past salary now. And this is very common. See, my example might be sounding little funny, but in big companies, it is very normal. They have a trade union. Sorry, not trade union. Employees union. In big companies, employees have their own union. And the union has a leader. And that leader fights with the company. And once they are frustrated, they go for a strike. In Hindi movies, you have seen Hamari Mange Puri Karo. Means they literally go for a strike. They say, now if you don't increase the salary, we will not work. All the employees go for a strike. And then finally, the directors of the company, they become helpless and they increase the salary. And they have to increase retrospectively. And in retrospective increase, whatever amount you get for the past, that is called arrears. Arrears means it was long due outstanding because of the dispute. It is not a routine outstanding salary. It was disputed salary which was pending. Now the dispute is settled, you received it. And tell me why it has been made taxable? Because in past, since there was dispute, no one will pay the tax on disputed amount. So tell me, in year 1, year 2, year 3, you paid tax on only 3 lakhs, 3 lakhs, 3 lakhs. You didn't pay on 40. Can government say you pay on 40 also? Dispute is going on. Company has not agreed to settle. So since the amount was in dispute, you didn't pay the tax that time. But now since the dispute has settled, so you will have to pay tax now. See, one of my cousin, okay, he is in Bank of Baroda. In this year only, he got some big arrears. And that arrears pertains to past year settlement. And the word arrears immediately should make you click, you know what, some dispute was going on. Dispute between the company and the staff. Now it seems the dispute is settled. And after settlement, you get the money now. So pay the tax now. Earlier you didn't pay because it wasn't a dispute. So now you pay because the dispute is settled. In short, arrears is also taxable. Let me write here. Arrears is also taxable. Last thing for today, bonus. Now see, normally salary is taxable how? On due basis or receipt basis, which is earlier. But for bonus, this formula doesn't work. Bonus will be taxable only when it is actually received. Purely on receipt basis. It doesn't go on due basis. Because see, bonus is a voluntary payment. Many times, boss will promise you, this Diwali I will give you bonus. Or if you achieve this target, I will give you bonus. So sometimes he will falsely promise you, but he will never give you. And he will keep begging, sir my bonus, sir my bonus. He will never give you. Oh, that time I announced the bonus, but sorry, now I'm not in a mood. See, bonus is something which boss will give voluntarily out of his wish. So sometimes he is a moody boss. He might have promised, I will give bonus to every employee, double of your salary. But when the time for bonus came, he just raised his hand. Sorry, I can't give the bonus, I don't have money. So what to do now? So in such cases, law says, don't worry employees, only when you actually receive the bonus money in your hand, that time you pay the tax. Because we understand bonuses are false promise many times. What did I say? Bonuses are false promise many times. And based on the false promise, if we expect an employee, no, your bonus has been confirmed, you pay the tax, it is never confirmed unless you receive it. That's why the law says pay the tax only when you receive it. So, actually everything is taxable over here. But bonus will be taxable on receipt basis. So, see here also what I will write. This is taxable on receipt basis. See here, if I use the formula whichever is earlier, it will go wrong. Because otherwise what will happen? Whichever is earlier. So boss has promised you this year you will get the bonus. So bonus has become due. but you will realize that you have never received such bonus. So it will never go on due basis, it is always going on receipt basis. So that's it, this was the 3 important points remaining in note number 9. Advance salary, conclusion, tell me what to do in sums. Advance salary, what you will do? Taxable. What should go in your mind? Although it is a salary of next year, but which year is earlier? Due or receipt, which is earlier? So it will be taxable. And for arrears, what should go in your mind? Arrears means some dispute has been settled. And because there was a dispute, we didn't pay the tax in past. But now the settlement has been done, now I will pay the tax. And for bonus, when you see in the question, you have to check, is it received? Because a promise which is a bonus which is simply promised will not be taxed. If it is received, it will be taxable. Yes, if the problem is silent, assume it is received. Sometimes they simply write bonus. Assume it is received. As I said in one lecture, whenever the problem is silent, make positive assumption. So assume positively that it is received and taxable. Only one thing is left in the chapter, which is perquisites, and that is one big thing, which is as good as half of the chapter is still left. Looking at this right now, you feel, sir, almost we are at the end of the topic. See how end? Let me show you the summary. See, wait, even this is done. Let me mark. Look here. So it seems only perquisites is remaining. But I would say half of the chapter is still remaining. Half is done, half is still remaining, because this theory is most important. It is not tough, it is lengthy. See, just because I am hyping something, don't think some dangerous thing is going to come. It's not dangerous, it is little time consuming. Otherwise, everything I will explain with the logic and the concept, nothing will be tough. But this will consume a lot of time, okay? Anyways, we'll start this next lecture only, means tomorrow. So let me see if there is some homework to be given, if I can give you some homework. It's great. One question I could find. In fact, one more question. Great. Question number 6 and 7 are homework. Question 6 and 7 homework. Don't worry, both the questions I will discuss in detail. One is question 6, other is question 7. Please do the homework without fail, and trust me, especially question 7 has got some good point. Let me see whether you will be able to catch that point or not in question 7. And one more thing, trust me, if question 6 and 7 is solved properly, till now whatever you have studied in salary, that will become successful. Because these two questions will in fact cover everything. Can you see? Everything else show. Arrears right now I explained. Bonus, voluntary, pension, gratuity, provident fund. See in the previous question. Leave salary, allowances, everything is there. These two questions if you do successfully, so till now's journey of salary has become successful. And then we can start a new journey tomorrow with perquisites. Okay? Bye. For a change, left the lecture on time. Okay? 2 minutes early. Revise and come. Revise and come. Please revise and come. Please do the homework and come. Please do the homework and come. Please come on time. Please don't ignore me.